What's going on with the dollar and why do you care? I will explain to you why you care. First of all, you need to understand that the dollar has been weakening versus the euro. Okay? Understand that the policy of the government right now seems to be that they want a weaker dollar. Why? Well, think of it this way. If the dollar is weaker, it means that whomever is trying to buy goods from outside the country, inside the country, it's cheaper for them to do it, right? So that means, therefore, that when you are able to produce goods in the US, it is cheaper for them. Therefore, they want to buy more goods, more manufacturing goods. So that makes sense against to feed the rhetoric that Trump wants to help the guy working in the factory, because then we're going to have more people producing items in the US to sell it outside the US because it's cheaper for the purchaser of those goods outside the US. So that makes total sense. Then you could tie this up to the tariff situation, which is essentially bring your manufacturing here in the US so you could employ the manufacturers people. So to that end, it's a good thing, right? The only thing is, whereas with a weaker dollar, it also means that for you to buy these items, it's going to cost you more money. Well, then don't buy these items, buy the stuff made in the US. Again, you see the draw, bring everything back to the US. Nothing wrong with that as long as your purchasing power keeps increasing. The issue is once you have a cheaper dollar, that you wanting to buy outside the US, that's going to cost you more money, therefore create inflation. Well, I don't have to. Well, I don't know. Do you want to buy a Mercedes? Unless they make it here, unless they make it all the BMWs or whatever it is that you buy from overseas, the wine, it's going to cost you more money. In fact, watch my video on that. And don't forget to subscribe to this channel and take a look at my Patreon channel. There's a link in the comments below. Okay, so what does it really mean for you? Well, it means that as the dollar is getting weaker, we have higher chances of inflation, right? Domestic manufacturings are going to go up. There's going to be obviously an expected dislocation in the short term, and you're seeing it, the dislocation. You're seeing what's going on in the stock market. This discussion about the tariffs, what the heck is going on with the tariffs? It's concerned because that dislocation in the short term, the idea is that, well, maybe in the long term, we end up paying for more expensive stuff in the US, but at least the guy or the woman that's making the stuff in the US can actually buy it, especially cars. So maybe the cars are going to cost us a bit more money, but at least you're able to buy that car in the US, believe it or not. So that's an issue that reverberating with the market, because in addition to that, so you have a little bit of push for the inflation, right? Because of the weaker dollar. In addition to that, you're talking about tariffs. So that's also going to push inflation a little bit higher as well. And as inflation goes up, stock market is going to go down. It's not so much inflation, but rates. As rates go up, stock market goes down. That's a simple principle of finance. If I give you $1,000 at 10%, that's worth today $10,000. I mean, if I give you $1,000 every year forever, that's worth $10,000 today. But if the rate is not 5%, but it's not 10%, but it's 20%, then that $1,000 is not worth $10,000. It's worth $5,000. So remember, the higher the rates, the higher the inflation, the higher everything, stock market goes down. And that's what's happening, as you could see, by a big way. We're down almost 20%. This is correction territory here. And that's quite unusual. Originally, they thought that, well, I thought Trump was going to cut taxes and he's going to do regulations, right? That's what we're expecting. But now we're seeing a bunch of different things. Now, again, this could turn out to be good in the long run if things work according to plan, meaning that they bring their plants over here, meaning that they buy our stuff and they don't lock us out. And they still believe in the fact that the U.S. is a country you need to contend with. But remember that right now, I talk about this in a previous video about the wine. What if they decide that no, I'm not going to I'm not going to take those tariffs. In fact, I'm going to tax you in return, and I don't really need the U.S. But that's not. You're not going to see that, 2 weeks from now. It's going to take years of that kind of policies for other countries to decide that maybe the U.S. is not the number one in the world. Therefore, we don't need to do business with them. They're not going to protect us. And that's a problem, obviously, right? Because then who's going to finance our debt? Because we need someone to finance our debt. We need investors to want to hold dollars. If they don't hold the dollars, then they don't. Who's going to finance that $37 trillion? So that's an issue. Now, going forward, what is going to happen is you're going to have a dislocation. In fact, what's very strange, the fact that the dollar being so weak versus the euro, it's losing its power, and yet it has higher rates than in Europe. So theoretically, that shouldn't be happening. I mean, we're not going down the drain. So there's discussion that maybe there is some sort of an coerced attack on the currency itself. That has happened in the past with Soros and the pounds. They made a boatload of money on that. There may be an attack on the currency itself, which is weakening it. Now, the pundit will tell you on the other side that no, that's what's really happening is the fact that people in Europe are enthusiastic about the future of Europe and they want to spend money. Well, they want to spend money, but they want to spend money on defense because the U.S. is just not going to protect them anymore. So is that enough of a situation to be created for them to really want to spend more money, and this is what's making the euro stronger? I am not sold on that. I think something else is going on. Now, the trick is, the administration is threading a very fine needle for short-term pain, for long-term gain. That will work as long as the other countries play along, meaning that Canada realizes they need the U.S. as a trading partner, and so is Europe. Therefore, they will make a deal. Making a deal meaning, okay, we'll start produce more in the U.S. We'll be more lenient in terms of the tariffs. I mean, Canada was hitting us pretty hard on tariffs, and so did Europe. So let's not think that this just came out. It's just that no one said anything, and now Trump says, no, I got to protect the people that voted for me, and these people mostly work in factories, and I want to bring the factory back in the U.S. I want to make it easy for the outside to come in to buy goods in the U.S. So that could work as long as everybody's sold on it, including the competition, including the people buying your goods. So at the end of the day, what you want to make sure is that this holds on, that this continues, and that Trump is able to sell this message along. He also has to sell a story here, because if that story is not sold and they decide to move and go somewhere else, again, it's not going to happen Monday morning. It's going to take several years of that kind of policy. Then the U.S. could be relegated to the second, third tier. After all, everybody's complaining that, well, in Europe, there's no U.S. cars, and here we have lots of German cars. Well, I mean, I don't know, maybe if we made a car that competes with BMW and Mercedes, I guess Cadillac, and I'm not so sure, then maybe they'll be buying those cars. You say, no, the reason they're not buying is because of tariffs. Well, there's a lot of misconception out there that you need to be totally aware. So remember, at the end of the day, what's going to happen is the market is going to be reacting to what is happening and not happening and what they think is happening. And right now, it doesn't look good. The 20% down, look at what they're doing to Tesla. They're massacring the company. So there's a lot of fears, a lot of concern. Now, what do you do as an investor? Well, as an investor, you need to first of all understand what's happening and make sure that whatever you're listening to is fully understood. Make sure you understand the people talking to you and why they're talking to you, right? Are they selling views? Are they selling a portfolio? Are they selling the administration's talking points, or the people that don't like the administration's talking point? You need to really make up your mind, because it's going to impact your job, it's going to impact the stock market, your 401k, it's going to impact a bunch of things. Right now, my friends, you should be very careful, because we're playing with something that we really don't understand the long-term ramification. We know the short term, we don't know the long term. Okay, and don't forget, inflation is rearing its ugly head here, and the dollar is weak, and allies are being concerned about the U.S. Now, of course, yeah, okay, great, but you know what? I elected the guy, and I want him to do things for me. Well, okay, he's doing it. Let's see what happens. Let's see how it ends up at the end of the day. But this will create uncertainty, which means the stock market is going to react accordingly. Follow my Patreon channels for pertinent comments about stocks, about the stock market. You need a different views, because as you notice, when you listen to those people out there on social media, they kind of have an axe to grind. No one really knows what drives the stock market, my friends. I'll tell you right now. Otherwise, we would have done it already. There's a lot of uncertainty. So, therefore, watch the dollars. Make sure that it doesn't get too weak. There may be some other things at play. The uncertainty, the traders take advantage of uncertainty in the market. Second, the US is still number one for now. 3, the market will recover once we start talking about something other than tariffs. Maybe tax rate, right? Tax cut. Maybe we talk about regulations, right? Maybe I think what Trump is trying to do here, he's trying to save some money not to pay for the $37 trillion. It's impossible, but probably because he wants to offset the cut. That could be a good thing for the stock market. But again, what you have to worry about, and that's a lot more difficult to comprehend and to visualize it, what are the other countries going to do? Now, a lot of new people are being elected, and that could have an impact as well. But as usual, on any portfolio, you want to hedge your portfolio for the downside, just in case something happened to the downside. Remember, stocks do not have to keep going higher and higher. Hopefully, in this process, we could have a rate cut. But I don't think so. There's way too many pressures on the stock market right now, and inflation talks. And maybe when we start talking about tax cuts, things are going to turn around. We'll see. Lots of uncertainty. Don't worry. Keep following. Subscribe. Go to my Patreon.